So we are witnessing a massive meltdown in the markets, and if you think last Friday was bad, this week could destroy the retirement savings of everyone around the world. Now, the idea of the tariffs is to restore America's industrial base to bring back manufacturing. But US supply chains are broken and the cost of manufacturing is just too high. But there's a bigger issue with trying to deindustrialize the world for the US economy. Trump's trade war is going to damage America's biggest thriving sector. Now, to turn the clock back to the 1900s, US technology companies are now at massive risk. Over the last 10 years, the biggest driver of growth in the US was from technology companies, like it or not. From iPhone sales to cloud services and even Netflix, these tech companies are the beating heart of the economy today. Just six tech industries accounted for over a third of total GDP growth over the last decade. Trump seemed to have forgotten that the US doesn't just export manufactured goods, but services to the rest of the world as well. There's a reason why countries move up the digital level because of comparative advantage. You can't stay forever at manufacturing lower end goods. You have to climb up the ladder sooner or later, especially when your economy becomes more advanced. Now, take China for example. They are no longer the lowest cost destination for most manufacturing. Beijing is losing a ton of manufacturing to countries like Vietnam. And that's why Chinese companies they are forced to move up the value chain. They have to climb up the ladder to services like AI. But the US still insists on bringing back every single industry. There's no comparative advantage to do so, and there's also no plan to make it sustainable.
You realize trillions of dollars of factories are going to be built in America. That's huge GDP. The factories being built in America are huge.
That takes
GDP.
years, and you've said that robots are going to fill those jobs. So those aren't union worker jobs.
It's automated factories, but the key is who's going to build the factories, who's going to operate the factories, who's going to make them work. Great American workers.
You
we
said
are going to
robots
replace
on other
the
networks.
armies of millions of people. Well, remember, the army of millions and millions of human beings screwing in little screws to make iPhones. That kind of thing is going to come to America. It's going to be automated, and great Americans, the trade craft of America, is going to fix them, is going to work on them.
Even if Lightning is right, where are the raw materials going to come from? If you pay American wages to make stuff, prepare for $3,000 iPhones. Even if you can get robots to fill the labor gap, other countries like China, they are far ahead in robotics. The cost of goods will still rise and lower living standards for all Americans. But the real concern here is how global retaliation could smash US tech companies to the ground. And this is the driving force behind the S&P, and the collapse is already underway. The Magnificent Seven are already losing trillions in market cap. Since January, Nvidia is down by 30%. Alphabet, Amazon and Apple, they have all crashed more than 20%. Now, Besson blamed the Nasdaq crash on China's DeepSeek, but that is rather disingenuous. Now, there's no denying that Trump's tariff war is the cause of this big collapse. There's a good reason why Trump is only focusing on physical products when it comes to this particular trade war. Why does the focus revolve around manufactured goods? Sounds rather suspicious, doesn't it? Maybe it's because the US has a trade surplus when it comes to services, and it's almost $300 billion. American companies export more services to the world than what they bring in. From digital streaming movies to services from Google, US tech companies, they export a ton to the global economy. And these are exports with a much higher margin than selling goods. And when you decide to tariff the world, realize that things can spiral out of control. Now, smaller countries like Vietnam might cave in and drop all their tariffs to escape punishments. But bigger economies like China and Canada, they have the ability to fight back. And they have to strike back or Trump will keep pushing his luck. And if the world decides to shift their focus and hit the US with tariffs on their services, a lot of tech giants will be in trouble. In 2024, the United States sold over $1.1 trillion worth of services to foreigners, more than double that of any other country. Using the logic of Janet Yellen or Scott Bessent, the US has an overcapacity of services. Should the world impose a 10% tariff or outright tax US services by 10%, this would equate to a $100 billion hit across corporate America. The economists did a calculation of how things would play out, and it would devastate US big tech companies at a time when their stock prices are still at record highs. Now, if we use Trump's formula to calculate the tariff rate based on deficits, US tech companies will face big reciprocal tariffs. On average, the world would slap a 19% import tax on US services. American service providers would face almost a 30% tariff in China. For the EU, the tariff rate would be 15%. Even Australia would impose a 30% tariff if this came to pass. In total, this would grind down America's $300 billion trade surplus in services. Sure, there will be layoffs and US tech stocks will continue to crash down, but the US will be ceding the future of the AI race to China. DeepSeek is more than a competitor to OpenAI. It's a wake-up call to the US that China, despite the tax sanctions, is moving up the value chain. Trump's tariff war is only going to benefit China. This is not the art of the deal. Take trade with the EU for example. Trump knows that he has a lot of leverage on Europe, and ever since he took office, he has been arm twisting them, but even Brussels is starting to take a stand. Many EU countries, including France, are discussing how to counter tariff the US, and they might just target US services exported to the Eurozone. In 2023, the US exported more than $300 billion worth of IT and business services, and that contributed to a net surplus of $120 billion from Europe. This is the Achilles heel of the United States in trade. If the US continues to push their luck, we might see the Europeans move elsewhere for their services. They could impose a digital tax on US services and run to China. Instead of Amazon Cloud, they might even head to the Chinese alternative AliCloud from Alibaba, and trust and believe if the trade war escalates, the EU will be forced to respond. Trump is already pushing Japan, Korea, and China together. It's unprecedented, but it won't be the only shortcoming. The problem with Trump is that he really believes the US will win the tariff war. All indications point to him going all the way. Trump doesn't just want Europe to pay the tariff, it seems that he wants much more.
And we take their cars, Mercedes, Volkswagen, BMW. We take their millions of cars. They take no cars. They don't take our farm product. They don't take anything. Europe's treated us very badly. We put a big tariff on Europe. They are coming to the table. They want to talk. But there's no talk unless they pay us a lot of money on a yearly basis. Number one for present, but also for past. Because they've taken a lot of our wealth away, and we're not going to allow it to happen.
Besides software and digital apps, US tech companies selling physical products, they're going to get clobbered both domestically and overseas. Apple is a great example of one such tragedy. This is a company whose products are designed in California but made and assembled in China. And what just happened over the past 7 days? Trump imposed an additional 54% tariff on goods made in China and coming into the United States. Pre-tariff, the cost for Apple to make the iPhone 16 Pro is around $550. Post-tariff, the cost will be $850. This is just the cost price. The retail price would also jump much higher. Even if you want to make the phone in the United States, the components are subject to big US tariffs. The processor comes from Taiwan, the display from South Korea, the battery will still come from China. How about the storage and camera array? Those comes from Japan. And if Apple brings in the components, they will still have to pay a tariff. Plus, they would have to endure a much higher cost of labor in the US. The increase might be $500 or even $1,000. We could see a single handset being sold for $2,000. And if everything including labor is sourced in the United States, this is a real possibility. Now, why do you think Apple stock is plunging? Tim Cook is caught between a rock and a hard place. People's budgets in the United States, they're going to get spooked out. Paying an additional $500 or $1,000 for an iPhone means less money for groceries and utilities. Plus, other countries might raise their own barriers really soon. The Nasdaq 100 valuation is still above the long-term price to earnings average of 25, but things can always overshoot down like in 2022, 2020 and the 08 housing collapse, which means the Nasdaq can easily fall by another 10, 20 or even 30%, especially if the world retaliates back against US big tech. US companies will be facing a big squeeze. People at home just don't have the money to spend. Tariffs once again are paid for by the consumer. Companies might absorb some of it, but they still pass the bulk of it down to American consumers. Now, how big will the impact be to the US consumer? Well, a major US bank, JP Morgan, now has a concrete answer to this. Trump's cumulative tariff hikes the total amount to 22%. This is the largest US tax increase since 1968. Simply put, people have less money in their wallets because tariffs are a form of taxation. No wonder their odds of a US recession is 60%. People just don't have enough money left to spend. So their discretionary spending, especially on tech products and services, could come crashing down real hard. So everything depends on Trump now. If he decides to ramp up the tariffs, he will push the world towards retaliation and greater escalation. And this is how crazy the markets and the economy have become, all reliant on just one man. Trump just issued a new statement and he's determined to tariff the world to the bitter end. And according to him, oil prices are down, interest rates are down, food prices are down, and there's no inflation. Now, firstly, oil prices and bond yields are down because we are sliding down into a recession. Demand has dropped. But the craziest statement is how the US is bringing in billions of dollars a week from countries on the tariffs, but it's not the exporters paying, but the American consumers themselves. This is a peek into the psychology of Trump, who still thinks he's winning, which means the tariffs are going to stay and the squeeze is still on for US big tech. But of course, this poses a big problem for US tech companies that are supposed to invest a ton of money into the country. The majority of new investments coming into the US are tied to big tech. And if we combine Apple, Project Stargate, Nvidia, and Microsoft, we have well over $1 trillion that are still up in the air. And we must repeat, this amount is not confirmed. If the tariffs continue and US consumers gets decimated, would it really make sense to double down on the American market? The Apple investment would add another 20,000 jobs, while Stargate will provide 200,000 jobs. But big tech follows where the money is. If the world decides to punish US exports, the tech giants could move their origin of exports to other countries, basically manufacture and provide services outside of the US. We could really see things backfire here. Apple might shift their focus to other markets that don't have any trade barriers. The model could be made in China and sold everywhere else except the US. Now, Trump wants to bring back American manufacturing, that much is clear, but he shouldn't forget about the potential blowback effects to the tech giants, because those are the only companies where the US still has an advantage against the world and China. But let me know what you think. Will the US doom their own tech sector? And is there even a plan behind Trump's tariff war? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.